The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
Good morning. You are listening to Money in the Morning with Mitch Goldberg. I am your host, Mitch. And we have a lot to talk about today. We have a lot to talk about every day. That's kind of like I want to cut off the music and just get to the heart of the matter. Guys in the studio, I do hear a drop of feedback. But let's get the day started with the important news that you need to know, because this is all about helping you make the best possible decisions about your finances so you could become the best possible version of your financial self. Dow futures are indicated to open down 100, continuing the downtick in the market that started Friday with those impressive labor numbers. 517,000 jobs were created. That was way more than expected, and it tells you that the economy is not slowing down enough for the Fed's taste, so they may keep raising rates more than we expect. You know, don't forget, the day before we were thinking, oh, the Fed's maybe got one or two more quarter-point rate hikes, and they're done with the cycle. And maybe, we'll skirt a recession, and the Fed, though, could start to cut rates by the end of this year. And, stocks will be back to the races. Not happening, unfortunately, today. So this is looks like we're having the third down day. Now, the future's only down 100 of the Dow. That does not mean that's how the day ends. It's just a snapshot of the moment. And investors are trying to properly reassess where they think the Federal Reserve will take interest rates. If you haven't noticed, interest rates are like everything for the stock market. They're certainly very important to the economy, but interest rates take a longer time. When the Fed raises rates, it takes a longer time to affect the economy, but it does affect the stock market much quicker. So the economy is actually piping along. GDP was good. Unemployment is low, lowest unemployment rate since 1969, and the labor figures from 21 and 22 were revised upward. S&P futures are off about 6.5 points, which is just a fraction of a percent. NASDAQ futures are up 1.5 points, so not even a rounding error. So everything is kind of flat. Federal Reserve Chairman Jerome Powell has a big speech today, and investors are waiting to see how he reamplifies his message that rates. He was very dovish when he spoke last Wednesday after the Fed meeting, and investors basically want to know more or less if he is still dovish and if he expects to hit the Fed funds rate of 5%. Maybe they go a little bit higher. So that's what we're trying to figure out, and we just don't really have the answer yet, and it's going to take time for this to settle out. Okay? We've had big earnings from the likes of Amazon and Meta. Meta was terrific. Microsoft was good. Alphabet, which is Google, and Amazon, not so great. Apple, a little bit about where expected, but that stock has been kind of weak as of late also. It's really hard for the stock market to go up when these mega cap stocks are not moving up. So just to let you know that the bigger the company is, the bigger its influence is on the S&P 500 index, which is the main index that we gauge the stock market. You can't invest directly into an index, but you could invest in a security that tracks or mimics an index. So when these companies are not doing well as far as their stocks go, it does have a negative impact on the overall stock market. And since they're so big, even when other stocks go up, like energy or industrials, it's hard for those to overcome the gravitational pull of the top 5 or 6 mega cap stocks. Okay. So we've got a couple of other things going on. Oil was coming down to the low 70s. It's up $1.15 at 75.26. You see at the pump driving around Long Island that oil, your gasoline is like around, 3.30, 3.35 a gallon that I've been seeing. We would like to see that get back to the high twos, of course. And the 10-year, which was 3.35 or so a week ago, is now back up to 3.65%. So you are obviously seeing mortgage rates sticky above 6%, about 6.25%. The housing season, the home selling season is about to get underway. And what we need to see is if inventory comes onto the market. We're talking about a lot. Well, so we're talking about, but you're hearing a lot about a housing crash. Like the price of your house is going to plunge. I want to say very clearly that housing is local. And when you have markets that are very, when boom and bust cycles are common, I'm talking in parts of the South, parts around Arizona, around Vegas. They typically have booms of massive home building. They overbuild. Austin, Texas is another one. And then prices come down. Boise, Idaho is one of those places. That is not the case everywhere. Long Island real estate, I think, is different. We don't have the land for overbuilding. We don't have the inventory of houses that other places in the country have. I don't see a crash. I just think maybe houses could come down a little bit. And then they'll appreciate again. And maybe they'll just appreciate at a slower pace over the next couple of years, 5-10 years, because you had such a big jump in the last 2 years. And houses are still way above where they were right before the pandemic started. So I don't think you get a crash in housing. And I think there's sometimes I sense a little panic or concern. I don't think Long Island has so much to worry about as far as the cost of residential real estate goes. In fact, I can even tell you for commercial real estate, good office space is expensive again and going up and getting hard to come by. So all those predictions about real estate, both residential and commercial, have not come true. The negative ones, I should say. So let's move on. China is opening, and that's expected to impact the price of oil. We'll see how that goes. There's also reports that copper is going up in price because shortages are developing because our electrified economy requires a massive amount of copper, and copper mostly comes from Peru and Chile. So when there's strife in those countries, which there is, it also impacts mining supplies. Okay, so stocks making some big news today are companies like Chegg. Do you know what Chegg is? You get your college books from them. Stock is down 22% following an earnings report. The company gave first quarter and full year revenue guidance that was below analysts' expectations. It's all about the future, right? So they noted subscriber growth challenges and concerns related to the health of the broader economy. I actually think that the trend of high school seniors going to college is not what it used to be. And I think that affects the entire college industry because you're going to start to see fewer kids going to college. Bed Bath & Beyond shares plunged 30% after the company announced a public offering to raise $1 billion. That's Bed Bath & Beyond is one of those meme stocks. It's a company that's in terrible financial shape. It's questionable as an ongoing concern. But if investors who want to speculate push the stock up, these companies, AMC did it, GameStop did it, they take advantage of that demand by turning out more stock into the market. They do an initial public offering, and I should say they do a public offering of stock, and they raise a lot of money to buy themselves more time. Is it worth buying more time for a Bed Bath & Beyond? We shall see. Oak Street Health is up 36%. Company's taken over. by CVS. CVS owns Aetna as well. So CVS continues to move into the healthcare space to diversify away from just being a pharmaceutical fulfillment center. So that's where we are over there. And a couple of Pinterest was down a lot yesterday. It's off a little bit more today. And that continues, in the advertising and search business, that they're just a little weaker. And that is, so Snap, Tumble, and Google and others. So it's difficult out there, but we're not down and out. Okay. Next up, we're going to talk about AI chat and GBT. That's something that I didn't expect to talk about today, but that's all you're hearing about. So we need to get into that, and you need to understand how that could affect business and the stock market and things like that. I'm Mitch Goldberg. You're listening to Money in the Morning with Mitch Goldberg on LI News 103.9. Thank you for joining us. Stick around after these brief messages. We've got some really interesting stuff about artificial intelligence to cover. We are back. You're listening to Money in the Morning with Mitch Goldberg on LI News Radio 103.9 FM. I want to talk to you about OpenAI. This is not what I expected to talk to you about today. I was going to get more into the Roth IRAs, but I think this is so substantial that it's worth spending a few minutes on this. Okay? We've been hearing about artificial intelligence so much lately, and how it's going to change our lives and impact healthcare, find cures for disease, and things like that. And I'm not really sure how much it's affected us as consumers, as citizens. It is affecting us, but it hasn't leapt to the full promise of what we expected as quickly as it was talked about. And that's very common for a lot of technologies. The internet was supposed to revolutionize the way we work and play, the way we live, everything. It did. But back in 97, the promise was there, but it took a long time. We went through the internet tech wreck, nuclear winter that didn't really come out until 2003 when Google went public. And then we finally started to really get into the full force of the internet. And then around when the iPhone came out and 3G from Verizon and AT&T, that's when we really had the promise of the internet, because it went mobile and you had the internet in your pocket. And it just continues to develop. So the next force, the big thing was search. And Google perfected search. And the more you search using Google, the better Google gets. So now it is just basically perfection. And it just gets better and faster. But when you search on Google, it serves a bunch of queries, a bunch of articles and links, videos, and you kind of have to explore these for yourself. With OpenAI and what's called Chat GPT, it's a little different, because now Google's not just curating articles, but if you use the AI, and Microsoft is making a huge push into this as well, they will not just give you the queries, they will actually give you the information you want, so you don't have to go through all the queries. GPT stands for Generative Pre-trained Transformer, by the way. And it's really significant. And there's so much money being spent from the big four. And that's Meta, which is Facebook, Alphabet, which is Google, Microsoft, and Netflix, the FANG stocks. So they're at the center of it, and you're going to start seeing all kinds of little stock offerings that promise the full potential of artificial intelligence. So you're going to start to see little stocks pop up and all these weird names come up. I want you to be very, very weary of like that, because I saw it happen with the pot stocks, and when pot stocks came out of the woodwork, it was a disaster. We saw it happen with internet stocks a long time ago, and then almost all of them were a disaster. We saw it recently with crypto-related stocks, and those turn out to be another disaster. And I don't want you to make that mistake if you've made it before. I don't want you to make it again. And if you haven't made that mistake, just listen to me. We're going to all learn something new. You're going to see little little AI stocks pop up. You're going to see exchange-traded funds created around artificial intelligence. There already are out there. Be weary. It takes a absolute huge amount of money to develop something worthwhile in this space. It takes a massive amount of computing power, data to make AI work. So having said that, Microsoft is already invested in a company called OpenAI, a San Francisco-based company, which is at the forefront of this stuff. Incidentally, the company, Elon Musk helped found the company in 2015. So, again, Elon Musk's name comes out in cutting-edge technology. It's just really incredible how that happens again. So, the way it works is you could make a query and say, I want a college-level essay on the Battle of Gettysburg. And you'll get that. You'll get like a really well-written, perfect grammar report. So a lot of educators worry that college students are going to start to use AI. It's like cheating. They're not doing the work. They're not doing the research. They're just putting papers together. They'll read it to make sure it's okay, and then they turn it in. High school kids could do it. Anyone could do it. So, but there are limitations. The artificial intelligence is not good at discussing or telling you the emotions going through the soldiers in the Battle of Gettysburg, the fear, the terror that goes through the minds of people. I'll give you an example. AI could tell you that a rooster will do cock-a-doodle-doo when the sun rises. But it can't tell you if the rooster's cock-a-doodle-doo caused the sun to rise or the sunrise caused the rooster to make the noise. So in a lot of ways, it is still very dumb. What it's really good at is collecting information and summarizing it into paragraphs that are very digestible and readable. So this will affect journalism, it'll affect law, it'll affect how you get your information. But it's not investigative and it's not interpretive. So there are limitations. And I know there's a lot of people who fear this stuff. I'm not particularly afraid of it because we've had chatbots already. So for example, if you call the cable company, you call Optimum, and they, you want to know what your bill is or what your data is, whatever. Those are all chatbots that just tell you automatically what the information is. So we've been using that. This just is chatbots on steroids. I shouldn't say it's just chatbots on steroids, but it is a massive leap in it. And the big moment here, the watershed moment here with this is that this is artificial intelligence for the masses. We can all use it, this high level of artificial intelligence. You could create art, and I see a lot of people creating art online with this now. It could create audio, like music and voice. You could even talk to this chatbot that Microsoft has, that it invested in. You can actually talk to it, and it'll talk to you. Like, you can interview it about what it's all about. There's some ethical components about it, like will it incorporate bias? Like, artificial intelligence talks about female roles as in the house, homemaking more often than not. And that's because a lot of the information it goes by is either old or not up to date. So there's things like that. And then there's things like it could serve you up inappropriate content, like very graphic pictures, pornography, pictures from war zones of people maimed and things like that. So it has a long way to go, and so far it's getting better and better at screening what's appropriate and not appropriate based on societal needs. So who is this going to benefit? I think it'll just continue to benefit Amazon and Netflix. You know, the big stocks that you already know of, the big companies, are the ones who will benefit from this. But it is fascinating. And when you see companies like Alphabet and Microsoft spend billions upon billions upon billions, and, you know, Meta's doing it. They're all doing it. That has something to do, obviously, with the stock market. And it's very worthwhile talking about, because these juggernauts, as much power and prestige that they have, this is only going to make that go up, as far as I can tell. I could be wrong, but I think I'm right. So it has a lot to do with how the stock market functions, how you get your information about your finances, your investments, how quickly things are processed. And it's going to have broad ramifications, I think, for all of us. You're not going to feel these broad ramifications tomorrow, though. It's going to happen a lot more gradually than the pace of the shock and awe kind of news that you're seeing now. So I hope that was okay to talk about in the show, guys. I think it's really important. I think it's really fascinating. And, you know, if you want to talk about this stuff and how it can impact your investments, you're welcome to reach out to me. I've spoken with a few of the listeners, and I greatly appreciate the time, and it's a joy to speak with you. You can catch me at clientfirststrategy.com to learn more about myself and my firm. You are listening to Money in the Morning with Mitch Goldberg on 103.9 FM LI News Radio. Have a great rest of the day, and we're going to talk again tomorrow about Roth IRA investing and other important things for personal finance. Thank you.
Securities and investment advisory services are offered through Next Financial Group Incorporated, member of FINRA SIPC. Client First Strategy is not an affiliate of Next Financial Group Incorporated. All the views expressed are those of Mitchell Goldberg and Client First Strategy, and not those of Next Financial Group Incorporated. Views are general in nature and not intended to be investment advice. Any discussion of individual securities should not be construed as a recommendation or solicitation by our presenters. Next Financial Group Incorporated does not provide tax advice.
The views and opinions